Good afternoon, dear colleagues. Dear Kuyen, it's a great pleasure and thank you for invitation to come here and to present. I would like also to extend my appreciation to the European Union and government in Korea for their support to PEMNA, which is extremely useful peer exchange program. Let me start first with the size of the support on social programs. It's hundreds of billions our governments and here governments in Asia and Pacific are spending on the social support program. And actually this morning when I woke up and I opened the Korean Times, on the first page it was the article about 17 billion financial support to almost 36 million Korean citizens due to the global oil shock that is happening these days. And despite this massive hundreds of billions spending, yet in the low-income countries, only 1 out of 4 people is covered with social support. It's a striking number. And leakage rates that we see across the countries ranges between 10 to 70%. Which means it's not a failed state, by the way, it's in some well-functioning economies. So the point I want to make before anything else, that fiscal cost of social program delivery failure is not a marginal error. It's structural and it compounds every year as these programs are repeated. And this is a question for all of us in this room, how we can improve it. As we analyze the World Bank program, we can point to 3 persistent delivery failures. The first is the leakage and diversion. So we do see in some countries it reaches only 25% of funding a social program reaches the ultimate beneficiaries, which means only 3 out of $10 for the intended money is reaching the ultimate beneficiary in the country. When we looked on the World Bank strongly favors cash conditional transfers, and analysis of 34 countries where we do have such operations shows that these conditional transfers strongly improve the human capital outcomes. But monitoring and compliance is very expensive and costly, and cross-ministry coordination is difficult. The third one is the last mile delivery friction. Basically, we do see it, again, different countries, Bangladesh, up to 4 hours to make the payouts. The fourth point I want to make today is, I called it a data blind spot. So once the transfer has left the treasury, most of the governments, they leave aside what actually happens to the money. Is the money which were intended for maternity support were actually spent to support the child, or they were used on something else and have not reached this? We don't know if this grant was to support the local economic activity, it was actually spent on this purpose or on this area in most of the program. So I can call this a data blind spot, and closing one of the most competing promises of this purpose-bound instruments. So where do the purpose-bound money fit, and what the concept is? The concept of purpose-bound money is encodes the constraints directly in the payment of instrument itself. So that money that were released cannot be diverted, cannot be spent on something else that was not envisaged by the original program design. As additional benefit, so that the conditionalities, they move along with the money. And also the real-time visibility or reporting on the transactions are embedded in this process. But the central point of today's presentation is not whether the concept is sound, it's whether it actually delivers a better fiscal outcomes in practice, and under which conditions and which program types. So let me first bring the examples of 3 countries which already piloted this type of project. The first one of the most advanced is Singapore. It started with the project ORCID. The project ORCID was based on the blockchain technology, and the conditions were embedded. So basically, there was a value, some kind of token, and a policy rep. And the recipients, while spending the money at the merchant through the smart contracts, were validated if this is eligible spending to be made. If the spending was not eligible, such transaction was simply blocked. So the blockchain and the distributed ledger basically brought the benefit of real-time visibility. It provided automatic compliance as the spending was not eligible. This transaction didn't go through, so there was no follow-up reconciliation needed as everything was done online. This project concluded successfully in limited scope, now transitioned to a new project called Bloom, and this part, so that has a follow-up. The second example was at Thailand, probably the largest social assistance program, at least to my knowledge, which was targeting 45 million recipients, 14 billion total scale of this program. So the geographic and category restrictions were embedded for local shops, specified goods, and a limited time frame to spend it. The program relied on a government digital wallet, but faced several challenges. The first was onboarding the merchants and the recipients, and we do see that despite 36 million were registered, still 9 were missing and couldn't onboard. So when the merchants' compliance collapsed at some point of time, and ultimately the program was challenged and in a court and abandoned in the midway of implementation, disbursing about 1/3 of the total money envisaged. So the key lessons is that despite the feasibility was proven earlier with Singapore, the real world implementation and the context of implementation, development of the digital system, development of the merchants was not actually feasible to be implemented in this case. Another example is from Malaysia. Malaysia relied on existing digital wallets, and this is a country which has one of the broadest coverage of digital wallets. So the program was simplified, the smaller amounts, less constraints, and basically, ultimately, it was deemed quite successful in utilization of funds, and the money were spent as envisaged with the limited in the geographic constraints and in time-bound constraints. So that scheme showed a quick uptake, and balances were activated and spent within the defined time window. Maybe three lessons. First, the instrument design details and matters, and choice of platforms which was envisaged is important for the success. Second, the private e-wallet model created a fast and low cost of implementation path that government was not required to build a separate system, but unfortunately it also limited the visibility of the government on the spending. So Malaysia demonstrates that operational success, how the operational success may look like, but cannot tell us if the fiscal outcomes were improved and by how much. So if we look, so what the evidence suggests from these three cases, the first conclusion that purpose-bound design can influence the spending behavior, and we did see from these countries that, especially Malaysia and Singapore, that implemented these cases are real, they are feasible technologically, and the constraints can be actually enforced. The beneficiaries respond, the uptake, the money actually were spent, so the uptake was high, and the money were used in eligible way. The second conclusion that all three countries, they made their own choices about design of the programs, about the use of the distribution. However, what was missing, there was no proper benchmarking versus the conventional program, how tight the geographic constraints should be, how do you balance the precision, and what is the right time for spending this money. Basically, the main conclusion is that all three programs have not provided the clear evidence, fiscal impact relative to a conventional alternative, despite all the operational data that was generated. So let me then briefly introduce you the project purpose that we are currently working at our unit. And the purpose is an evidence generation instrument. It's not a technological platform. It's not a pilot program. This is a structured decision-making that you can use before actually ex ante, before designing the platform. So what we do, we build the simulation platform for different type of programs, for different type of context development, like merchant density, the existing digital network that would allow to simulate the outcome of the program. In the phase 2, we would work with the country pilots in the countries where and when it makes sense and is applicable. So World Bank does not promote any technology. We do not promote any specific type of the program. We are a neutral analytical partner, and we would allow the countries to use this information as they wish. So first, purpose offers a structured decision-making process. It changes that offering is replicable methodologies that can be applied before a fiscal commitment is made, and we saw in some countries it can be very costly when the size of the program is big. Also, we connected the purpose to the PIFA, Public Expenditures and Financial Accountability Framework, which is like a golden standard for measuring the PFM system, to measure value for money, leakage and integrity, administrative efficiency, transparency, and fiscal risks shocks. So for I mentioned sorry, let's went back instead of forward. So what does it mean for the PEMNA members? That ad hoc experimentation is available, and you can generate a comparable assessment versus the conventional program that you run. This framework can be adapted to a different fiscal context, transfer types, and digital infrastructure, maturity levels of the digital payment systems. It has a strong connection to the PIFA framework, and since many countries in among the PEMNA members have already piloted a similar purpose-bound money concepts. It can be exceptionally well positioned to contribute to the shared regional evidence base, but also testing how it works. We do see that this concept of purpose-bound money is real. It's sound. The technology is feasible. The operational cases exist. But even in a well-evidenced promise, it's not a policy, and promising concepts become policies when we can answer the question that matters to the Ministry of Finance. Does it reduce the leakage? Does it improve the multiplier? Does it introduce the risks that outweigh the gains? And what cost and what scale? And these questions cannot be answered in a concept paper. It's a technology demonstration or a single country experience. They require structured evidence, comparable context, with the rigor that fiscal decision-making demands. And my question for each ministry in this room is not whether the purpose-bound money is theoretically superior or what you're already doing, or whether it is better for your programs or your population or your infrastructure. That is a question only evidence that can answer, and that evidence is what we are now building to generate. So we are open to involve to engage with the countries for the phase 2. We will be open to share more details about the methodology and to test the simulation with your existing programs. So happy to answer the questions and engage as a follow-up. Thank you.